Back with us now, Chief Investment Officer at Mackenzie Investments, to talk about investing in the banks. Those interesting polls mentioning that in this environment where rates go up, which historically that helps the margins for the banks to a certain point, I guess. If growth is cooling down, that's also a challenge, or if you have to set aside more money for potentially bad loans, these are some of the balancing factors in a changing economy, I suppose.
That's right. I think Gabriel summed it up nicely in the factors to really watch for. Just to double click on some of those issues, when it comes to attracting deposits, because of the events that have happened over the last few months, the banks are probably having to incentivize more to attract deposits, paying higher rates, a lot of money going into high interest savings accounts. So it's really changing the dynamic for revenue generation and net interest margins for the banks for now. So there's a few headwinds, but the Canadian banks are trading at very low multiples. So there's a bit of a push-pull there. Are they fully reflecting the more challenging conditions? You have to sort of look at all the different segments of the banks. There's the retail bank, but there's also the investment banking operations, which have been weak. There hasn't been a lot of new issuance, headwinds there, although better equity markets certainly help on the wealth management side and will be good for flows, and also just earnings when asset values go up in asset management and in wealth management. That's positive for the bank. So lots of moving parts, very low valuations. I think there's also the mortgage side that people will be looking at to see the health of the mortgage book for each of the banks in a higher rate environment. There has been a lot of ink written and spilled on the health of the Canadian housing market. And it was really interesting to see in last month, in April, to see an uptick in pricing. I think that was a surprise for many.
Yeah, well, I don't know if that's a byproduct of the Bank of Canada hitting the pause button recently, but people not shying away from homes, just like we were talking about tech stocks being a constant source of appeal to a lot of investors right now. Okay, so let's say you're a short-term investor, let's say you're a long-term investor, and you're looking at Canadian banks. What's your advice?
I think in the long term, the Canadian banks have been extremely successful at allocating capital and have been a wonderful investment for Canadians and global investors. They've really benefited from the structure of our Canadian banking system and the safety and security that the Canadian banks have offered for investors. So long term, we still think very attractive. I think short term, heading into earnings here, I think that I'd just be a bit cautious because I'd want to see what comes out of the banks on their earnings when they report this week.
Yeah, and I guess if you were going to look at the U.S. players, it's such an interesting environment where it feels like the money center banks are just going to get bigger and bigger. You still have some of this regional uncertainty stateside. Some of the Canadian banks, Paul was alluding to this, get into the mix on that because that's been an area for Canadian banks to grow, is to do deals in the U.S. and is trickier time on that front, clearly. But when you look at the Canadian banks versus, I don't know, some of the U.S. names, or the big U.S. names, let's say, do you still like their prospects longer term?
I do. I mean, what you're really seeing in the U.S. is a gravitation towards the Canadian structure in banking, and not to say that the regional banking sector is still going to play an important role in the future, but for now, it's certainly going to play a less important role as people feel more comfortable being a part of the large money center banks and having their deposits there and doing banking with them and the security of having their loans with the larger banks. So we have a short-term, medium-term dynamic here that needs to play out as we digest higher interest rates. Hopefully, even with future potential increases in interest rates by the central banks, what we're seeing in the second derivative is either a pause or a slowing in interest rate increases. And we do believe that we're getting to the end of the tightening cycle here.
June's going to be a big month for the central bank speak for sure, and this week we'll get a taste on what those Canadian banks are saying. Lesley, thanks very much. Good to see you.
Great to see you too, John.
All right, Lesley.